Big businesses look to us for specialist insurance solutions. Do you? Over 80 of the top 100 JSE-listed companies trust us to protect their businesses.
A good day to you and welcome to this new special series with myself, FIFI Peters. This series places the microscope on the different sectors and divisions within the insurance space and external factors that influence insurance risk. Throughout the series, we will be bringing you experts that will discuss and explain these risk factors in more detail. In today's episode, we speak about challenges facing the construction industry, the effects of South Africa's credit rating downgrades on the industry, the reduction in infrastructure and property development projects, and the importance of risk management. The experts joining me to unpack this in more detail are Vuyo Rankwe, the head of niche business at Santam, Kurt Meyer, CEO at Mirabilis Engineering Underwriting Managers, and Shane Graham, also from the company, who is an executive director at Mirabilis Engineering Underwriting Managers. Gentlemen, good day. Thanks so much for joining the program. Vuyo, let's begin with you. In most parts of the world, the construction sector is seen as a leading indicator for economic growth. And I suppose the demise of the sector is not too surprising given what we have seen happening to the South African economy in itself. But just talk to us about the state of construction in light of COVID-19 and what the pressure points in the sector presently are.
So, Fifi, thank you for that. Prior to COVID, we had seen a battling sector which had 67 quarters of decline, which didn't bode well for the sector as a whole. The sector had already been impacted by high interest rates. It's a highly financed sector that requires a lot of capital investment. And if there's not enough financing, there isn't much happening in the sector. Then we were hit with the downgrade. And then following that, we then had, COVID. Ultimately, this led to less projects happening. And if you think about, infrastructure or projects as sort of capital investment to generate sort of a growing economy and cash flows later on, you can imagine what the impact on the economy moving forward would be. Given that, the pandemic happened, a lot of projects were put on pause, which has helped the sector quite a bit in the sense that there's a lot of catch-up happening now in 2021 and expected to continue into 2022. So we expect to see some growth and hopefully some growth in projects. Luckily for us as an organization, the impact in projects locally was subsidized by the economic growth and infrastructure happening across the continent. So, from that perspective, we as an organization have managed to maintain our income from a construction perspective. However, locally, the number of policies that we've insured have been on the decline.
And Shane, just to bring you in here as well to speak more about the pandemic's effects on the sector, perhaps from a safety point of view. Vuyo mentioned the fact that we did see some projects having to even be placed on hold throughout this time that we have been grappling with COVID-19. But talk to us about what this has meant for safety and the impact on the sector as a whole. Shane?
So, thank you, Fifi. Thanks for having us. I think, the construction industry as a whole has always been, to an extent, safety focused. So, personally, when you go on a site visit to go and conduct a survey, or people are visiting a construction site, there's usually a protocol that they have to go through where they go through a safety procedure. Sometimes that includes a video and there are basic training issues that people go through. So I think maybe what COVID has done is it's maybe heightened the awareness for the safety. I don't know that it's changed too drastically. It's made people more aware, and also, having said that, it has resulted in delays in the construction sector. You've got all your safety protocols now. You've got your social distancing. Those are creating, or they did create problems during the height of the COVID pandemic. That has eased a bit, but I think the general awareness of safety on sites has been heightened. And I think that will have a positive impact on the other aspects of safety. The induction courses and that have just been expanded to cover more than merely putting on a hard hat. So it's become more focused on the softer and the interpersonal issues as well.
Mm-hmm. Just speaking further to the challenges presently facing the construction sector, I mean, from the slowdown in the economy and then the disruptions of COVID-19, perhaps from a safety perspective. But Kurt, your thoughts here on perhaps the competitive landscape and to what degree this has also presented some headwinds for the sector presently?
Before COVID, it was a challenging environment already in the construction industry. And I think the competitors, speaking only about the contractors, it was a tough market. And we've seen many big contractor names actually disappear from the South African market. So it was challenging. And going forward, I think it's actually going to be worse. As Voye explained, 2021, I think it's highly unlikely that the economy and the industry itself will bounce back that quickly. Our feeling is probably 2022, 23. And with that, competitors are going to really be price sensitive and really go in for the projects that and there are few projects. There aren't big projects at the moment. And that relates to the FDI that will come into the country, the foreign direct investment. Very important. The economy must be stable. They want to see a really a government that supports new business opportunities coming from outside the country. So I think all those challenges are there. We battle through them every day. I think from being part of the Santam Group allows us to actually from insurance perspective, analyze all these data that comes into our offices on a daily basis, and it changes every day, to actually work towards assisting the contractors in landing these contracts from an insurance perspective.
Right. You are right. We have seen a lot of big names fall off, have to shut their doors in the past about 10 years. I tell you, I came into journalism and it was the first sector that I covered. And within this 10 years, we've seen a lot of the companies either make heavy losses and some to the extent whereby they weren't able to sustain themselves anymore and they went bust. And we saw big guys falling off the JSE. But nonetheless, the conversation in most of the newsrooms that I've worked in has always been, when is the construction industry going to turn the corner and what kind of reforms at government level would be needed to ensure that this sector could be revived. And Shane, perhaps you can come in here with your thoughts on what can finally get our construction sector going again.
Sure, that's as you say, that's the age-old question. I think there's no doubt that there is clear intent from the government to fast-track economic recovery and especially on the construction sector. There's a 10-year investment plan with just under 2.5 trillion rand, $125 billion, which has been discussed in years gone by, and it's always going to be a question of when that actually comes about. So the intent is definitely there. The problems on the ground that we face is that projects tend to take a long time to get to tender stage. I mean, I can recall a case when I was in the engineering field. I was working on a design for a new highway that would link Johannesburg and Pretoria. I was at that company for 10 years, and by the time I left, the highway was still not even out for tender. So those projects tend to take a long time, and then once the tender has been approved, then there's further delays. And so I think maybe there's a skilling requirement, an upskilling requirement in government, looking at those tenders, prioritizing the spending, where it's going to be, in which areas, what types of projects. We are also seeing at the moment, and we all drive around on the roads here, we're seeing a perceived lack of maintenance, and perhaps that needs to be sped up a little bit, put onto high alert within the tender departments, because it costs a lot more to rebuild a road than it does to maintain it for 5 years. Then we've got the opportunity for public and private partnerships, especially in the transport and electricity sector, which we are seeing a lot of in terms of your renewable energies, more specifically, and those should assist the growth in the medium to the long term. We've got the rule of law, which needs to be upheld in the country. We've got projects that are put on hold or even cancelled in some cases, because there's been a social uprising in the area, people stopping contracts because they don't like the way that the contract has or the tender has been awarded. And those arguments need to be resolved quickly so that they maintain the positive impact or view that foreign companies looking to invest build on the country. Then existing companies that have got contracts they struggle to get paid. They struggle to get paid on time. That's obviously putting off newcomers. I wouldn't want to go into a sector where I don't know when and if I'm going to get paid for the work that I put in. There's been a lot of talk of labor-intensive contracts, and again, I go back 20-25 years, and maybe there is room for that in a mechanized world. There's room for that on our continent, where we do have access to human resources that foreigners and the European and the American countries maybe don't have. So I think there's a whole shift on how we do things. There's no quick fix, unfortunately. Another one obviously is your stable power supply. It doesn't affect construction sites. You can put one brick on top of another without electricity, but it's the manufacturing process behind the construction site. So it's the manufacturing of the bricks, of the cement, of the steel, and everything that goes into it. So the power grid is also a sore point at the moment, but it's something that needs to be resolved as well.
Sure. So no quick fix, but I imagine that the delays that are happening around the issues that we know need to be fixed are not making your jobs easier within your sector, and perhaps are seeing a bit of a tapering of demand for some of the products that you could offer the industry. But Vuyo, you did mention a bright side to this entire mix, and I think while the saying does go that or the grass is greener where you water it, it is no surprise that the sector and industry players like yourselves are trying to find greener pastures outside of the country. You mentioned the rest of the continent and the opportunities presently being offered there. Just to give us a bit more color and detail about what work you are doing in the rest of Africa.
So as part of the Sanlam Group, we have a presence in 33 countries across the continent. However, we do business as Santam and its associated partners like Mirabilis, Emerald, and SHA in 44 to 46 countries, if I remember my stats correctly, across the continent. We tend to partner with the local players to get a better understanding of the market, and what we bring to the party is expertise. So expertise in construction underwriting, expertise in property underwriting, expertise in liability and marine. So we come with the technical expertise. as well as the capacity in A-rated insurance paper, whilst partnering up with local entities to underwrite more complex risks that their markets do not currently cater for. And we tend to extract sort of premium by playing what we refer to as a reinsurance role. So we insure the local insurer on those specific risks by providing them the insurance capacity.
The countries that you mentioned, I mean, 33 different countries on the continent, and plus that's 33 perhaps different languages and cultures and accounting systems and a whole lot of complexities perhaps that you guys have to navigate through. Kurt, just talk to us perhaps more closely around the complexities, the challenges of doing business in the rest of the region and how you are trying to mitigate against them.
Yes, thank you. It is difficult, it is challenging, especially as at home there aren't enough opportunities. So as Voyo said, we look outside the borders. As you would know, each country has its own rules and regulations and quite strict insurance laws, and also the ability to move cash from one country to the other. It's also important that we follow and adhere to those rules. So it's very difficult when we're working in 40 countries, trying to receive the premium in country, and obviously following the rules as per the Reserve Bank. So there are challenges, and I think Voyo and Shane will tell you that every day is different. So we might place a risk in Ghana and things go smoothly, for example, just as an example, as a country, and everything's fine and the workings are great. We might do another one in the same week, and then the difficulty is to actually receive the premium or the premium to be paid in our country. It makes it very, for us to offer the ability to provide S&P A-rated paper via the new re-agreement that Santam/Mirabilis has agreed and signed. It allows us to actually present a solution to foreign investors, particularly coming into Africa, that their asset is safe, that the claims paying ability is secured. Obviously, I must just, as an insurer, say that we only pay indemnifiable claims, but to bring that in, but yeah, it gives them peace of mind that when they invest in Africa, that they've entrusted Santam/Mirabilis with the insurance part of that risk, and that the ability for Santam and Mirabilis to pay that claim when the time comes is there. So it's a complex. It's very complex. Our finance director, we have hours and hours of conversation to find solutions. It's not easy. But when you meet these people overseas and you build these relationships, in Africa, just the exploring the opportunity and also learning from them and what's happening in their countries. We learn together, we share knowledge together, and that makes the whole relationship special. And obviously we're growing our business at the same time, which is perfect. Yeah.
Right.
Thank you.
Thanks. Gentlemen, I want to talk more also about the trends that are shaping your industry from innovation to ESG. And perhaps we start off with the latter. And Shane, if you can just talk to us about ESG and how it is governing practices within your sector as it pertains to construction, and how you are assisting some of your clients to comply to the requirements demanded from an ESG perspective.
FIFI, thank you for that. So ESG also obviously known as sustainability. There's sustainability issues, your environmental, social governance factors. And for us in insurance, identifying, understanding, managing these risks are at the core of what we do. Understanding, and it's normally the hard sort of risks that we look at. So the environmental and social and governance factors are all relatively new to our industry. But what it has shown is that all risks have different dimensions. So it's not purely a material loss that you're going to suffer. Your decisions do have an impact on the sustainability of the planet, of people. It affects climate change. It affects human interactions and the human rights violations. There's corruption allegations that come into it. And the challenge for a corporate or a company like ourselves and Santam is that there's no standard approach when you try and calculate these ESG metrics. It's really an open room that we are now trying to furnish, and as such, it is an iterative process. Every time we look at a risk, it has to be in the back of our minds. What are the ESG implications? And the reasons for that are firstly our own internal moral compass, and secondly, there's the reputational risk. The public has become extremely aware of the obvious ones, I guess we can say. For example, the human violations and the climate change, but there's a lot of other factors as well. So companies need to live up to whatever they put down on paper. Their reputation can be severely impacted by that. And if we look at just very broadly, when we look at environmental, I mean, what does that include? We're talking about things like climate change. We're talking about environmental degradation, protected species, unsustainable practices, animal welfare. So there's a lot of, and I'm sure that list will grow over time. But at the moment, those are the sort of measures. When we look at social, we're looking at human rights. On governance, we're looking at bribery and corruption, corporate governance, and then poor product and safety issues. But those are the identified ones at the moment. And as I say, those will grow. The issue that we face in Africa and South Africa is that we have large fish to fry. I'm not going to say larger fish to fry, but we have large fish to fry, and one of them facing our continent, for example, is a drastic shortage of power. So when you've got a lack of power and you've got surplus supplies of commodities, of which one of the bigger ones is coal, does it make sense to say you can't use that coal to produce power? The rest of the world's been doing that for many years. We in Africa and South Africa, as we know, are still building coal-fired power stations. The lifespan of that is 50 years. Do we as an insurance industry say we're not going to insure these anymore? How then do we supply power to the continent? How do we justify that we're going to have someone living in a house without electricity while there's all this very cheap coal around that we could be using? And the obvious answer there is renewable energy. The problem with that is that the build cost upfront is a lot more than coal. The running costs are lower, and the output. I mean, you would need thousands of turbines, wind turbines, to generate the same as, or hundreds of them, to generate the same as a coal-fired power station. So those are the challenges we sit with. But there is definitely, I mean, as we all see, a move to renewable energy. We're seeing a number of projects around the continent, and so I think, given a couple of years, we will be looking better on that front. But also, the construction industry as a whole is damaging to the sector, to environmental sector. The production of concrete and steel on its own is responsible for about 15% of worldwide CO2 emissions, which is substantial.
Can I jump in there, Shane? Just to the point that you've just made, or the couple of points that you've touched on, and Vuyo, I'd like to get your thoughts and an understanding of how Santam is approaching risk management in the the ESG space. Rightly so, the continent is abundant in coal, and I think that there's a recognition that this does need to change, but it needs to change at a pace that is appropriate and realistic, I suppose, for Africa. But at the same time, we have seen a lot of banks and lenders put ambitious targets on the table regarding their future financing of fossil fuels like coal. So how is Santam and the insurance industry then approaching this very important and critical and very complex risk management step when it does come to ESG investing?
Phew, Fifi. It is not an easy question to answer. So depending on where you are in the world, you would have a different stance on coal power and ESG in general. So you look at mainly Europe, those countries, as well as the insurers in those countries, are part of the net zero partnership, which is basically to get to net zero emissions by 2050, I think it is. South Africa has also agreed to that. However, if you look at current progress, I mean, it doesn't look like we're going to be anywhere close to net zero emissions by 2050. You move, east, and insurers in China are creating capacity to support, coal fire, whilst Europe is pulling out their capacity. So it depending on where you are, your view might be different. As an African insurer, we cannot separate sort of our environmental requirements from our social requirements. As Shane has quite eloquently explained, the electrification on the continent is relatively low if you compare it to Western Europe and the West as a whole. So in every project that we underwrite, we need to take into consideration, the levels of electrification in the country, the specific country that we're underwriting the risk in, sort of the potential social impact of giving people access to electricity, whether it's a coal-fired station or a new gen power supply. And so at this stage we're kind of straddling the fence in the sense that we want to support a net zero by 2050. However, realistically, when you look at what is happening on the continent, the ability to leapfrog from into environmentally safe or safer power generation isn't necessarily available or cost effective, and therefore where power stations are justifiably where coal-powered power stations are justifiably there to be produced, we will insure them, and if not, then we would like to support renewable energy as an alternative.
Sure. Kurt, can we circle to the other trend that is also shaping all industries, not only the insurance industry, and that is technology. Just talk to us about how technology is changing the game at Mirabilis, and what kind of innovations and efficiency gains you have been able to realize as a result of embracing more technology within your business.
Yes. I think it's important. Innovation was brought to the fore immediately when COVID struck the industry, especially financial institutions. We were all we were forced to work from home at that point. Luckily for Mirabilis at that time, we were quite ready and able to do it. And we had 3 days. I remember the president announcing that we have 3 days to get ready. I think it was March the 27th, 2020. And we completely paperless within South Africa and totally dependent on our network and coming in via the internet. It has its own challenges, obviously, with cybercrime being around and making sure that the environment is protected as well as it should be to avoid hackers coming into the system. But we were able to basically run the business from home, and many industries did that at the time. What we've learned is that our clients needed the same service as if we were in the office, and it was a challenge initially. Telephone systems being automated, computer systems completely automated, software brought in, policies being issued remotely, and providing clients with real-time feedback. What we've done is we managed during the lockdown period to design a online quoting service to the insurance brokers in South Africa. We call it Mirabilis Online. It's basically a underwriter ready and able, sitting right next to the insurance broker in South Africa, either via any electronic device. He can do it on his telephone or his laptop or a tablet, and he can provide his client immediate service, i.e. quotations, that enables us to also produce policy wordings much quicker and just enhance that service delivery. I think it's very important to understand that from an insurance broker point of view, that the whole industry has changed. We've changed. We the insurance company / UMA underwriting manager, providing the capacity for insurance. The insurance broker has to go out and still meet the client sometimes, and the client also needs that immediate feedback. And we realize that there's an opportunity for us to actually get involved and design the system. It's completely live. It went live on the 1st of July 2021 this year, and the feedback has been great. We're seeing I think something like currently about 800 brokers on the platform and generating quite good income, obviously from a GWP. I think that is the future. Clients, as we know in the world today, social media, Shane mentioned it, Voyo mentioned it, they need real-time feedback, and we were able to provide that. But bearing in mind, this product is only designed for the smaller projects where there's a quick turn. So, for example, we insure projects from you building a small garage or a renovation at your home, right up to a dam in Africa, or bridges, stadiums and infrastructure projects across Africa. But this is only designed for South Africa at the moment, and we're looking to roll it out. So we are very excited about it, and hopefully we can build onto the platform and provide much more value-added products on the exact same platform.
All right, and I think it is quite encouraging for your business, as you say, that you are seeing a bit of a ticking higher of your gross written premiums, just so that we're all on the same page here. But gentlemen, in closing, as we do talk about South Africa's construction industry and also the activity on the rest of the continent at large, Shane, in your view, how soon will growth return to South Africa's construction industry, and where is it likely to come from?
So we've noted an uptick already following COVID. But I must say that the South African companies have been looking north of our borders for growth opportunities, to try and springboard that process. And I think the what is known as the sort of the Africa strategy applies to both the construction companies and insurance companies. And obviously, as Mirabilis, and as Voyo mentioned earlier, we're well positioned to follow our clients, the construction companies, into north of our borders. I think, it's going back to the first question you asked me, is how can government facilitate the changing environment in South Africa? So I think the speed of revitalizing the construction and industry in South Africa, and subsequently the insurance of those projects in South Africa, is really going to be largely determined by government's actions or inaction. But I think the move to north of our borders, and I mean, we don't see Africa as a homogeneous region. Every country has its own nuances, as Kurt mentioned earlier, its own regulations, requirements. But if we understand that, and we can work around those issues, that opens a lot of doors, a lot of opportunity for us as a South African insurance company and as South African construction environment to certainly grow our top line, and hopefully that translates into a bottom line.
Certainly, I mean, not even withstanding the fact that pressure is on government to get its house in order a lot quicker. In order to perhaps even ensure that we are in a situation in which we're looking at the upgrade of ratings to our sovereign, something that perhaps could make the cost of debt a lot cheaper for the private sector to want to run into the sector and plug in the gaps. But Vuyo, your closing thoughts here and where to next for Santam?
Yes, so specifically, on the local economy, I think there's an opportunity here for the private sector to play a bit more in terms of the delivery of infrastructure development. What government needs to do is really just open the doors for more public-private type partnerships. I think there still is quite a bit of capital, in our country, and if it can be directed towards some infrastructure development from the private sector, with the aid of the public sector, you should see, a faster revival of the construction space. In terms of, Santam, I mean, we're a little bit, held at gunpoint by what goes on in any one particular sector. So from a construction perspective, we dearly hope for the sector to revive, because that impacts the business that we do in terms of our engineering class of business. We will continue to follow sort of the projects across the continent and try to partner with local organizations in terms of the Africa strategy moving up north, as well as partner with international construction companies coming onto the continent to help deliver the insurance solutions to their projects.
Right.
Thank you.
So a future full of partnerships there. Lastly, Kurt, the next steps for Mirabilis at this stage.
Yeah, thank you. I think currently it's the market is so volatile that it literally changes every day. Shane mentioned earlier that we see uptakes of public-private partnerships. Vuyo mentioned it. We see it coming through and then it stops, and then we see it again and it stops. So it's a collective, I think. I don't think there's a one-stop answer or one-shop answer. It's a collective. It's going to take industry. It's going to take construction industry, government, ourselves, Santam, Mirabilis, to go out there and just be active and try and stimulate the market, and from our side as Mirabilis, really just to ensure that the market out there knows that we are the biggest engineering underwriter. We have the most skills that we can offer them, and bring that to the table and enhance that delivery in order for them to bring home the actual final product, and that's landing the business. I think that's key. Our focus will always be South Africa. We completely focus in South Africa. We use that as a sounding board, as Shane says, to go into Africa and support the businesses there. And then obviously we have our international portfolio that we also look after. So excited, tentatively excited about the future. And yeah, we think that it will get there. I'm not as Vuyo said, 2021, 22. Vuyo, I disagree. I think it's going to be 2023, but we'll take a bet on that. But yeah, but we're fully supportive of government's view and private businesses, their view, and ready to assist where we can and help. Yeah, thank you.
Thank you. Well, I certainly hope that it is sooner rather than later in terms of our construction sector finally turning the corner. I mean, so many knock-on and positive ripple effects that it could have if it was beefed up to its potential, most notably on job creation. But gentlemen, thanks so much for your time. That is unfortunately where we will have to leave today's conversation. I want to thank my guests for joining us today. Vuyo Rankwe, the head of niche business at Santam; Kurt Meyer, CEO at Mirabilis Engineering Underwriting Managers; and Shane Graham, Executive Director at Mirabilis Engineering Underwriting Managers. Join us again next time as we continue this series exploring more sectors in the insurance space. It's goodbye for now.
Risk management is at the heart of what we do. Our deep-rooted industry and technical expertise enable us to manage the unique risks your business faces.